Hi, if you have 100,000 kroner sitting in your bank account right now, what you will be do with that? Because your first 100,000 kroner has the potential to completely change your financial future, but only if you use it wisely. Making the right decision today, and it could grow into hundred of thousand or even million of kroner over the coming decades. If you do nothing, the inflation will quietly eat away its value year after year. So welcome to this video. Today I am going to talk about why your first 100,000 kroner is so important, how Swedish investor can invest safely and intelligently, and some bigger mistakes that new investor makes and how to avoid them. So let's simply start. Why your first 100,000 kroner matters more than you think. Having 100,000 kroner in the bank can feel very amazing. It makes it easier to walk away from the situation and offer more options, such as leaving the job that you don't enjoy. You can handle the unexpected expenses without panic. You can make the life decision with confidence, and perhaps most important, it proves that you have developed the habit that is needed to build the wealth. But here is the question, is your money working as harder as you are doing? I know many Swedes spend years in saving the money but spend very little time to learn how to invest it. But before investing even a single kroner, make sure that you have emergency fund. A good rule of thumb is 3 months of living expenses if you are single and 6 months of living expenses if you are family or dependents. This money could stay in the high interest saving accounts where you can access it very quickly if needed. You should also keep some money aside for the major expenses that are coming in few years. The money needed within the next few years should not go into the stock market because the market is very unpredictable in the short term. Once you have built this foundation, now it's time to put your extra money to work. Many people feel safe keeping all their money in their bank account. When the bank balance doesn't go down, they feel secure, but there is a hidden problem known as inflation. Inflation means the cost of living arises over the time. Think about the grocery, electricity, fuel, housing cost 10 years ago compared to present. Most of the thing is significantly expensive today. That means even if your bank balance stays the same, your purchasing power is shrinking. 100,000 kroner today won't buy the same amount of the goods and the service 10 years from now. That is why investing matters. Investing gives your money the opportunity to grow faster than the inflation over the long run. Now let's look at simple example. Suppose you are having 100,000 kroner into diversified stock market fund, and historically global market fund has delivered around 8 to 10% annual return over the long period. Although future return never guaranteed, but let's assume it gives the return of around 8%. So after 1 year, your 100,000 kroner become 108,000 kroner. It's not life changing though, but after 5 years, it's about 147,000 kroner, and after 10 years, it will be around 216,000 kroner, and it will continuously compound year after year. And remember, you didn't add even a single kroner. The money simply kept growing because your return started generating their own return. So earlier you started, the more powerful it becomes. Now let's talk about the practical side. If you are living in Sweden, one of the easiest and most tax efficient way is invest through an ISK. Millions of the Swedes used ISK account because it's simple and designed for the long-term investing. The most popular platform are Avanza and the Nordnet. Many beginners think that investing means picking individual stocks, but it doesn't. In fact, most successful long-term investors keep the things incredibly simple. A great starting point is a global diversified index fund. For example, at Avanza, you can see some global index fund that have given a pretty good return over the last 1 year. This fund is well diversified across many companies around the world. So instead of betting on one company, you are investing in the global economy. When comparing the funds, pay close attention to the fee. A difference of even just 1% in the annual fee can cost you hundreds of thousands of kroner over the lifetime. Whenever the topic of investing comes up, many people ask, what's about the property? Real estate can absolutely be good investment, but property investing in Sweden requires significant capital. You also need down payment, mortgage approval, maintenance cost, insurance, and ongoing expenses. But in contrast, investing in index fund can start immediately. Now let's talk about investing mistakes. First mistake is waiting too long. This is one of the most common mistakes. People always say, I will start investing when I understand everything. But investing isn't like an exam. You don't need to have a perfect knowledge before starting. Imagine the two people both start investing the same amount, 100,000 kroner, but both earn the similar return. But one started investing at the age of 24 and his return becomes 1 million by the age of 60. While the another started investing by the age of 35 and their investment grows only up to 680,000 kroner by the age of 60. This difference is because one give 10 years extra time to grow their investment. So the lesson learned is start investing before you feel ready. You can always learn more along the way. The second mistake is chasing the trend. The new investor often chase the meme stock, crypto, the next big thing, or unmissable opportunity. Problem is that many people buy after the price has already exploded to a higher valuation. Investing should never be excited. Good investing is often the boring one. The most successful investor to focus on consistency rather than excitement. If you enjoy researching individual companies, that's fine. You can keep those investments as a small portion of your total portfolio. The third mistake is selling your investment during the market crash. This mistake destroys more wealth than almost any others. The markets go down, it's very normal. Every market decline in the history has felt scary at that time. But the long-term investors understand something very important. Temporary decline is not a permanent loss. Loss only becomes real when you sell the holdings. The investor who builds significant wealth are often who stay invested during the market correction. Some even invested more during the market falling period. That's why having an emergency fund is so important when unexpected expenses appear. And then you don't need to force your selling your investment at the worst possible time. If you're serious about building the wealth, here is a simple plan. Build an emergency fund, pay off expensive debt, open an ISK account, invest in the low-cost global index fund, and automate everything. Now is a final thought. Your first 100,000 kroner isn't just a money. It's proof that you are capable of building the wealth. Most people think that becoming a wealthy require a perfect stocks, the timing the market perfectly. But in reality, wealth is usually built through the simple habits repeated over many years. Save consistently, invest regularly, stay patient, and ignore the noise. I really hope you find this video very helpful. If you would like me to make any video on any topic related to money, wealth, investment, personal finance in Sweden, let me know in the comment below. Thank you so much for watching this video. I will see you in the next video. Until then, goodbye.